Hello everyone, it's the Investor Smith and it is 2022, all right? And it is time to get back to reality, all right? Back to reality in 2022. What do I mean by that? 2020 was the year of stock investing. 2021 was the year of real estate. And in 2022, it is time to get back to reality. What do I mean? Now, in 2020, the stock market, it exploded. With the initial crash because of COVID-19, we all experienced the lockdowns and things like that. The panic selling going on, it caused the stock market to crash all of a sudden, right? Now, when it crashed, you have a whole new wave of investors that came in, and they call them they call it the Robin Hood investors. That during that time, the app Robin Hood just exploded. All right, you have a whole wave of investors that came in during that initial market crash, and then the stocks of certain companies shot right back up because what happened was it was just due to the initial fear of people cashing out. All right, so once that happened, that was a major income stream, right? And then people rode the wave of stocks all throughout 2020. It was a pretty successful year for the stock investment. In 2021, the stock market got back to reality, all right? Now, in 2021, it transitioned into real estate, all right? Real estate has been experiencing almost a 20% increase in value year over year for the last 5 years. For the last 5 years, it's about 85%, right? If you owned a home for the last 5 years, your house the value probably increased almost 100%. All right, that is unheard of. So what we're due for now is a recession. I hate to be the bearer of bad news, but back to reality means that we are probably facing a recession. A recession is looming. All right, what is a recession? All right, now. We increased in stocks, we increased in real estate. Now, what's bound to happen is a contraction, all right? So what's been going on, it's been an influx of money. When we experienced COVID, any economist will tell you that it only takes one major incident to cause a recession, right? We are now experiencing two simultaneously. By now, in 2022, COVID-19 is probably not going anywhere for the next 5 years. All right, it comes, it goes. We have surges such as the end of 2021 around the holidays. Now, what that does initially, the government backed us up with a whole lot of government-backed programs. We had the PPP loan, we had the unemployment loan, and we had stimulus checks, right? But however, there's going to be a period of time in which the government says, okay, man, we can't keep backing that stuff, right? So what initially you had businesses, they suffered initially, but however they regained they regained whatever they lost, right? Because the government backed them, all right? They lost expenses on employees, the government gave them the PPP loan. The employees lost their job. The government gave them the pandemic unemployment. Right now, when the government says we're not doing anything anymore, the business said, where we're going to get that money? They're going to get that money from you, which is why now we're experiencing what? Inflation. All right. So the value of your dollar has gone down because the prices of our products and the consumption has gone up. Right. So what we're experiencing now is inflation of just basically the cost of living. These businesses business is not going to take a loss for anything, all right? So before they take a loss, they're going to pass on their loss to you, the consumer, all right? So while we're due a recession is this reason alone, all right? How long can these businesses keep raising their prices of losses due to consumers not spending, right? They're not going to keep reducing their losses. What's eventually going to happen is they're going to reduce You, the employee. All right. So after a business can't keep increasing their prices and consumer spending starts to slow down, and our money and everything, that all the free money that we've got from the government, once that stuff starts to slowly die down, then businesses are going to say, okay, now we're not getting enough business to sustain, our profit. Once their profitability starts to suffer, they're going to start seeking where they can, and where they often choose to do so is your employment, right? Human capital is it's the highest expense to a business, period. All right. The cost of your salary and your wages and your health care and expenses, they're going to cut you for next. All right. So a recession happens when consumers reduce spending, and is usually a combination of several factors, but most importantly, it is when jobs start to reduce, when jobs or employment is lost. All right. So this is something that you want to monitor and you want to take serious, because we've gotten relaxed with all of the money that was thrown at us, and there was a lot of people doing crazy things, renting vehicles for no reason and things like that, and a lot of taking vacation. My generation taking vacation for no reason. But however, it's time to get back to reality, because the direction in which we're going to is definitely we're in a contraction period. We've been expanding for a long time. All right, now with things like the COVID-19 crisis, which is still continuing, and now we have the Russian and Ukraine war, which caused the price of oil to double basically overnight. You have to start thinking about things like a recession. All right, now once job loss happens, it's not going to be how it is now. Right now, people are not taking jobs. Why? Because they're overpaid, because of things like federal programs and things like the PPP loan and the EIDL loan. Things like that is not going to, they're slowly phasing out, right? So what you have to do is you have to equip yourself to be ready, all right? So what's going to happen is here's how you prepare yourself. You have to start stabilizing your income. You have to really examine the utility of your income, right? Like, as it's going to follow the same trends as the COVID-19 crisis, right? So when the COVID-19 crisis hit, who were the most safest? Healthcare, all right? The same thing with the recession. Healthcare, financial services, public safety, public services, and groceries, and funeral services. Y'all gonna be more stable than most, all right? So if you don't have a career in those type of fields, if you got a career in retail, manufacturing, things like traveling, if you have a business printing T-shirts and stuff like that, those are the stuff that people are going to start to cut out. Even the construction workers, once people have to choose, how they're going to survive, they're not worried about renovating the kitchen no more. They're not worried about adding a half bath anymore, all right? So these are the industries that you're going to have to start evaluating and saying, all right, well, I need to back myself up a little bit more, right? As soon as the buyers start seeing that the cost, and now the Fed has reduced has stopped reducing the interest rate. Now they're increasing the interest rate. Buyers are going to start to evaluate. Well, should I buy a home at this time? Because is it the right time? Especially with the increase or influx in real estate of the prices. Now, when the price is high and that interest rate that payment doesn't look how it used to look, right? Now, with your investments, how you want to guard yourself is you want to start looking into industries that will actually profit from or actually stable during a recession. For example, like you had companies that actually benefited throughout the transition of the COVID-19 crisis, right? Like companies like Zoom, Facebook, anything virtual, Cash App. They kind of transitioned into basically a cashless and touchless society, right? But everything else, they kind of suffered because of, when it halted, when COVID halted people and held us, and we had to be on lockdown, then farmers weren't getting milk, onions weren't being delivered, right? The transportation system was disrupted. So you have to evaluate your investments on that, in that aspect. All right. So what will be disrupted? What change will be disrupted? What won't be the same anymore? What is needed? Okay. Believe it or not, fast food restaurants, they are pretty stable during a recession. You know why? Because people are going to start to evaluate, well, am I going to eat out at that Italian restaurant or whatever, that steak, that whatever steak 58 or whatever, or can I go grab me a $5 meal for the whole family, right? McDonald's, Wendy's, Burger King, all fast food restaurants, they do pretty well during a recession because it's either that or this, and most people choose the cheapest route, all right? So that's what you evaluate when you're doing stock investments and things of that nature, all right? So as a consumer or just a regular, if we're just talking about your regular finances, you want to monitor your spending and you want to save up to 4 to 6 times your monthly expenses. This includes rent or your mortgage. This includes food. This includes your car payment, daycare, things like that. You need to have that in savings, right? For so long, during expansion, you have these money gurus encouraging you to basically live off credit. Why do you got money in the bank? Why do you have why you got money in the bank? You should be leveraging your credit, right? What would you rather have? $800,000 in credit or $100,000 in the bank? You need cash in the bank. You know why? Because when your bills are due, what do they require? What do your mortgage require? Can you pay a mortgage? You can't pay any mortgage loan. You can't pay any of your mortgage bills. You can't pay that with a credit card. And if anybody can, let me know. All right? But this is why you need cash in the bank. All right? You have to reduce your dependency on credit. All right? Because when it's time, as COVID-19 showed us, when bills are due, these companies want their cash. All right? So let's reduce and start to get back to reality and get in the mentality of a recession is coming. All right? You want to secure you. You want to secure your family. You don't want to be out here, making decisions based off or forced upon you because you weren't prepared. All right? So if you got 4 months or 4 to 6 months of your living expenses, if you do experience a hardship, you got 4 to 6 months to look for a job. You might got to switch industries, how the 2008 recession did cause many to. You might have to get a little part-time job. However, you can sustain for 4 to 6 months. All right. So if you have, you might have to increase streams of income. All right. If you are in one of those unstable fields, you might have to start doing something that you don't like right now just to save up the money. But you want to be prepared. All right. So that's my message for today. I want everyone, all right, to get back to reality with your money. All right. Back to reality. Okay. Thank you guys for your time. I want you to like, share, and subscribe if you are not following already. All right. Thank you. There'll be more content to come.